Welcome back to Investing Talk Podcast.
Today we're looking at Rigetti Computing.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Let's do it.
Rigetti Computing is operating in one of the highest growth sectors out there, but also, one of the highest risk.
Commercial quantum hardware.
Exactly. What's so fascinating here, I think, is their competitive structure. They're one of the real early innovators in superconducting quantum hardware.
Okay, so let's unpack this. What makes them stand out? I mean, you've got these big tech players, other quantum startups. Why Rigetti?
It really comes down to one thing: vertical integration.
Right.
They have full stack platform. And that means they handle, well, pretty much everything from their own in-house chip design and fabrication.
Which is huge because that
Sure.
shortens those critical learning cycles, right?
It's absolutely critical. And it goes all the way up to the control software and even the cloud delivery through partners like Amazon Bracket and Azure Quantum.
I see. So this capability to both sell entire systems like Novera and also offer cloud access, that creates a pretty significant moat.
It does. It creates sticky customer relationships.
So they're not just selling a component here and there, they're selling the whole pipeline. That feels like a huge advantage, especially when the tech is still so specialized.
It is.
But speaking of specialization, let's look at the numbers, because the recent quarterly report, it showed some weaknesses.
It did.
Revenue came in at what, 1.947 million, a miss versus consensus, and a year-over-year decrease of about 18%. I mean, that sounds like a flag.
It does. But, and this is the important part, we have to view this company through a sort of pre-scale lens.
Okay.
They're still unprofitable, which, is pretty typical for deep tech R&D leaders.
Yeah.
They recently disclosed an operating loss of $20.5 million. But what really stands out here is that despite that revenue miss, management showed really tight cost control. They actually beat Wall Street's EPS expectations by 2 cents.
Okay, so here's where it gets really interesting for me, the outlook. The market seems totally focused on 2026. What are the forward projections telling us?
This is the whole thesis, really. Analysts are projecting a sharp inflection point.
A huge one.
The current forecast suggests FY 2026 revenue hitting nearly $22 million. That represents what, roughly 164% year-over-year growth?
And that kind of massive acceleration, it has to be tied to enterprise adoption, right? And scaling up those multi-million-dollar system orders like Novera.
That's it, exactly.
So from a financial health perspective, how are they funding that huge growth expectation? Are they leveraged?
No, they maintain very low long-term debt. Their balance sheet was strengthened by a recent $350 million equity raise.
Okay, so they have cash.
They do. As of the last disclosure, they had $26.1 million in cash, but that's supplemented by over $530 million in short-term and long-term U.S. Treasuries.
So they're funded to reach key milestones.
They are, though you have to remember all that capital is currently being reinvested heavily into R&D.
Right. We also saw some news about insider activity that might raise some eyebrows.
Yes, that's definitely part of the story. In September, there were significant insider sales. We're talking transactions totaling over 125,000 shares sold by directors.
And while those were stated to be under pre-established trading plans,
Right, the 10b5 ones.
that consistent selling over the summer, that can certainly weigh on retail sentiment.
It can. But on the flip side of that coin, institutional ownership has actually been increasing in recent quarters.
Which suggests the smart money is taking a longer view.
It does. It suggests they're looking past the short-term noise.
So let's talk about the chart, because the stock's technical story is just one of high volatility and, explosive growth.
It's been a wild ride. Over the past year, the share price has just dramatically risen from lows around, $1.28 to a recent high above $58.
An incredible move.
And that sharp upward movement established a clear pattern of higher highs and higher lows.
I remember that surge. What was the catalyst for that huge jump?
The stock soared around 84% in September alone.
84%.
Yeah. That was primarily driven by the announcements of 2 Novera system orders, which added about $5.7 million in new contracts.
And also the market perception of growing alignment with the U.S. government, right?
That was the other piece. It just highlights that even, modest contract wins can trigger these dramatic price re-ratings in such a high beta name.
So where are we now, technically?
Currently, the price is consolidating. It's trading below its 50-day moving average, but importantly, it's still well above its 200-day moving average.
Which confirms a technically strong, bullish, long-term trend that's just taking a breather.
Exactly, a short-term corrective pause. Key support levels right now are really being seen in the low 20s.
Okay, so looking ahead then, what are the near-term triggers that the market is watching? What could resume that bullish momentum we saw?
The most critical event in the next 3 months is going to be the Q4 earnings release. That's expected around early February 2026.
And investors will be scrutinizing that call for any evidence of sequential revenue growth.
Right, and progress on key technical milestones and, of course, updated contract pipeline details. They'll be desperate for news on new enterprise or government deals.
And beyond earnings.
Beyond earnings, you'll see material movement from institutional flows. The institutional 13F filings in January 2026 are going to be huge.
Because they'll show whether major funds are increasing their exposure or, getting out after the big run-up.
Precisely.
All right, now for the speculative buzz, and we have to emphasize this is all unverified, what are the financial forums talking about?
The persistent rumors usually include a possible expansion of cloud partnerships, maybe involving some of the major hyperscalers.
And there's always that industry chatter about high-profile government contracts.
Always. But there's also the speculative talk about a breakthrough quantum processor milestone, something like exceeding a major qubit performance threshold or a big step in error correction by early 2026.
And if any of those things materialize,
They could trigger very rapid appreciation.
So for Berlins, we have to address the risks. This is a high-risk investment. It often trades more on sentiment than on current revenue.
Absolutely. The bear case is very real.
So what are the biggest dangers facing shareholders right now?
First is just commercialization and execution risk. I mean, the revenue is still small and lumpy. The road to sustainable profitability is long, and it means the company needs to execute flawlessly on its technical roadmap.
Any delay in securing new major contracts could just slow that anticipated 164% growth to a halt.
It could, sharply.
And what about funding concerns, given that high burn rate?
Dilution risk is still on the table. While they have a large cash cushion now, that negative free cash flow means they are very likely to require periodic capital raises down the road.
And the competition is, well, it's fierce.
It's incredibly fierce. They're up against peers like IonQ and D-Wave, not to mention the enormous R&D budgets of big tech.
And if an alternative quantum architecture proves superior,
Then Rigetti's focus could suddenly lose its appeal. It's a major existential risk.
it really is the classic high-risk, high-reward story. It requires a lot of patience and a strong stomach for volatility.
I think that's the perfect way to put it. Rigetti Computing offers this highly leveraged exposure to the quantum computing sector. It's reinforced by their vertical integration and that strategic alignment with U.S. government interests.
But its trajectory hinges completely on converting that technical lead and those contract wins into that massive projected revenue growth in 2026.
You are investing in a blue sky future, a future where small wins can lead to massive share price movement. It's an investment tailored for those who are comfortable with multi-year holding periods, punctuated by these sharp trading opportunities around major news catalysts.
If you enjoyed this analysis and want more deep dives into complex, cutting-edge companies, make sure to subscribe and hit the like button. We'll see you next time on Investing Talk Podcast.